Here they come. All right. Good morning, everyone. March 10th in the trading room from tradingology.com. Dave and Dan here, welcoming you to another week of fun volatility.
Absolutely.
How are you guys doing this fine morning? We have volatility in everything, the markets and the spread. That was for anybody that was watching in the Slack channel there. There was a half a percent move up, followed by a 0.5% move down. So be fast and whatever you're trading and be safe.
Absolutely. Volatility breeds more volatility. We had interesting in the Slack room. I mentioned the trading room that the dollar index at the end of the day yesterday had reversed higher, so we're probably going to have a rally today. That turned out to be true. Also, interestingly enough, at the same time, the 30-year bond, which was under 1%, I think it was like 0.6%, lowest rate ever, had bounced back, and it closed just about 1%. Now it's up a little bit over 1%.
Yeah, speak of the devil, I just pulled up the treasury notes after the close yesterday, and everything across the board's under 1%.
Unbelievable, right? Just crazy. So yeah, so that's kind of an ongoing thing. So I don't think that the even the 1 month. See, look at that. They had the 0.5%. Yeah, look at that. They had the 0.5% rate cut, right? When was that? It was like on the 4th, maybe.
Yeah, it was.
Let's see. It was it was Monday. It was just Monday.
A 0.25% on the 6 month, almost 0.27.
Yeah, that's kind of crazy. No, when was that? Darn. I think it was last week on Monday. And so you're going back 7 days. So it was the 3rd. Yeah, the 3rd. And so that's why we've got the 1 month down from 1.1 down to 1.57.
Yeah, remember it was like right now. It was exactly 1 week ago because it happened while we were recording this session on Tuesday.
Yep. And so their target rate now is 1 to 1.25, but the 1 month is at 0.57, which is almost a half a 50 basis points below where they cut.
Which just leads to the discussion we were having where they don't actually control it. They're just hoping we follow with what they say.
Exactly. And so they're setting expectations. They have an expectation policy, which means that basically whatever they say, you're supposed to follow along with. And now we're 0.5 point below, almost a 0.5 point below where they set the target rate, which means that they have to cut again because they follow the market. They don't make it.
Right. They like to think they do.
They like to think they do. Yeah. And they like to think that they think everybody else thinks it.
Right.
You know. Good morning, Andre. Good morning, Greg. So we're officially, I believe, in a bear market. I think we've got these volatility days. We're going to have some days that are up, some days that are down. One of the things that could be, I mean, with everything going on with across the world with this situation, which is kind of like we were already at the edge of a potential recession. That just kind of pushed us over the edge a little bit. But I think we're in for a 1.5 to 2 years, very, 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 very tough time in the markets, gaining any kind of traction. Corporate profits are going to be squeezed tremendously. And it's not just airlines, and it's not just cruise liners and ships and companies. Travel across the board. There was a story, interestingly enough, this morning where I forgot what country it was. It was people who were going from Italy to another country, and they stopped them and they said, "Look, you can't enter." They blockaded the border. Sorry, we're not accepting any visitors from Italy at this time.
Yeah, how long is that going to take to spread across the world where suddenly all borders are closed?
Yeah.
Or is it, yeah, just the select few? Oh, no Italians, no Chinese, no this, no that.
Yeah. Yeah, it's a real possibility for sure. So you got, people are afraid to go into work, factories. Cash is now a transmitter. You've got, there's just so many things that people are overreacting to. Also, it was kind of interesting. I saw a story why toilet paper was running out in all the stores.
Yeah, it's everywhere. I don't understand that.
Yeah, I don't get it either. My wife is like, why don't they stock up on food instead of toilet paper? I
Yeah,
said,
we've
I don't
never
know.
heard of a toilet paper shortage ever for anything that's ever been like news breaking. All of a sudden, it is for this one.
Yeah, it's just strange. And then so I go into the store yesterday to buy some stuff, and there was hardly any. We're in a small area, but there was still a lack of toilet paper on the shelves. It was kind of like getting really low. It wasn't full, so I FOMO'd. I bought some toilet paper.
I'm
And
actually going to be going for other stuff later today, so I'll be curious to see what mine looks like.
yeah, I just FOMO'd into toilet paper. How weird is that, right? But I just saw it was going low, so I said, well, I better stock up. Psychology. It basically, the article was basically just psychology. People think they need to stock up on stuff. A lot of conspiracy theories about what's going on too.
Yeah, lots of those for sure. Interesting. Looking at the internals, it's actually setting up as a true trend into the positive.
Well, that's the way the markets have been going, right? We've had a lot of days in which it looks like it's starting out as a true trend day, and if we stay above that 2000 plus 2000 level, it will be one.
Yeah, good timing, Stephen. We must have been thinking the exact same thing because he's talking with the high volatility. Do you think it's expected to see more true trend days? I don't know about true trend days, but absolutely extreme levels. I would say it's going to be more common. Extreme up, extreme down. If I roll back in the last couple of days here, look at the end of yesterday was unprecedented.
Yeah.
I think it was at like a 1 or a 2 I actually saw, or below a 1.
It was only, I think it was like 150 stocks up or something. That was it out of 4,000.
It was crazy. I think I looked at the market timer spreadsheet and it was like 70 to the positive. I was like, wow.
Really extreme. And that's what happens when you have a lot of volatility. You don't have any chop days anymore. The market makers and specialists are getting flooded with orders. And I think what precipitated this today was, number one, was the, as I mentioned, the dollar had reversed from its lows yesterday. But also, and it could be because Trump came out and said that he's going to do some economic stimulus today.
Yeah, I heard. What did I just see briefly? I saw payroll tax cuts for businesses.
Yeah. What are you going to get, an extra $15-20 in your paycheck?
Is that going to help people or is that going to help businesses? Obviously, I know he's trying to stimulate the business side, but
well, if he cuts the payroll tax on the business side, that helps businesses. Yeah,
right.
People are going to get $5 or $10 more in their paycheck, or 20 even, and maybe depending how big he does it. But it's going to help the businesses a lot.
Whether that's the extent of the stimulus package or not, we will soon find out. I don't think it's the end of it.
Yeah, The Economist mentioned that they had an article out this morning saying that they thought that part of Trump's package is also to pay for all the hospital bills as a result of anyone who contracts it.
Wow.
Yeah, so I guess that's really good political headlines for re-election. I'm not sure it's going to do much of anything else.
I saw another statement. Someone saying, yeah, once the election's over, you'll never hear about this again.
Yeah.
Or it'll just become one of the many.
Yeah.
Wasn't it one that you tweeted this morning about mortgages? And was it Italy?
Italy suspended all mortgage payments for the entire country.
Imagine that.
That's another stimulus package.
Suddenly, nobody has to pay their mortgage.
Yeah, really weird, right?
That'd be fantastic
Yeah, it'd be great, but
for a short term,
just imagine what the liquidity does to the banks.
right? Yeah. They no longer have all those mortgage payments coming in.
No, I mean, you're talking a lot of money. I mean, geez, it's crazy.
Look who just joined us, a blast from the past himself, JD, if that's the same one. Welcome, sir. It's been a while.
Hey, yes, good morning. So
we reverted back to the opening levels just about across the board. Interesting.
Yeah, I think we've got a true trend day, but you know what? All the true trend days we've had so far have always been like massive price moves. So we hadn't really had an opportunity to do anything except, I mean, yesterday was kind of scary because if you actually got into the market, what if they hit the circuit breakers?
Right.
You know, you couldn't get out.
Especially with the futures being locked up all morning. We should talk about that shortly, since anybody that may have missed it, I highly doubt you did, but we hit the circuit breakers early in the overnight session Sunday, and futures trading was halted all night.
Yeah.
And then the SPY hit the circuit breaker right after the open, and then all trading was halted for 15 minutes for the Wall Street to find a buyer somewhere. They had to make some phone calls.
Hey, pick up the phone. Get those buyers in here. Where are they?
What's Goldman doing? Come on, where's Warren?
No, it's not time to call the big guns in yet. I mean, you know, it's kind of funny. I don't know if it was a parody or if it was a joke, but it looked like Trump, came out and said, "Oh, hey, look, your 401k is still at 50%. Maybe it's not up, 100% like it was, but it's still at 50%."
Oh, jeez.
How insensitive! Unbelievable. Yeah, Stephen, the cash index, the Dow future or Dow cash index, when it in the S&P 500 when it declined 7%, will trigger the circuit breakers, but the futures contracts overnight are 5%.
And that's just the first trigger. If we'd have went to 13, we'd hit a second where we'd have another pause. And then if we hit 20, we're done for the day.
Yeah. I wonder if that's ever happened. Have we ever hit 20 and they just kind of closed everything off for a day or two?
I don't think so that I know of.
I looked at the circuit breakers hitting. Evidently, it did happen in November at the election time before Trump was elected in November of 2000 and when was it?
16,
yeah. So they had that circuit breaker. Before that, though, it was 2008.
Yeah, I think I was trying to remember, did the circuit breakers hit, or did they preemptively close the market for, what was it, 3 days after 9/11?
Did they close that long?
Or was it 2? It was a little while. I forget exactly how many days it was. Or maybe I'm thinking of flying in the airplanes, how long they were grounded.
Well, they may have halted the market, but it wasn't because of the price moves.
Right, I think it was
because of that.
To prevent it. This is what they were thinking.
Right. So at 2008, also 2008 was the last emergency rate cut, which the Fed did last week of 0.5%.
And so when's their next meeting again? I believe that they're already talking
coming up
25 or 50 points.
Yeah, it's coming up pretty soon. I think next week.
Yeah, at first I said, in the March meeting, and my brain's still thinking I'm in February. It's like, oh, wait, that's in like 10 days or something.
Yeah, I think it's next Wednesday. They're going to cut again. Some people are pricing in a whole percent move, 100 basis points.
Oh, I hadn't heard that one yet. Interesting.
Yeah. I heard 100 basis points. I think it's going to be between 50 and 100.
Wow. Getting as close to zero as possible in one fell swoop.
Yeah. See, the one thing, when everybody's on one side of the trade, if they're signaling that they're going to cut rates, but it's only because, you got the 3-month T-bill down to 0.5% already. So they got to cut at least 0.5% just to stay in step with the market.
Stay on par, right.
But when everybody's on one side of a trade, that's when my little, hairs stick up on the back of my neck and say, wait a minute. If we get a sudden rise in interest rates, which is the last thing the Fed really wants because of all the treasuries they got sitting on their books, right?
Mm-hmm.
Those prices are going to dive, and they're going to get really hurt with that.
Speaking of their books, I didn't look yet. What they do for repo last night? Oh, look at that. Only 123.
What was the accepted?
All of it, 123 billion.
Really accepted all of it? Wow.
Look at that.
Oh yeah, look at that. Maybe they're getting a little bit looser on their collateral
Well, wait, there's more.
criteria.
There's another 93.
Accepted 45 on that one. Well, that's only that's
$70 billion last night.
Yeah.
Wow. And look what's in there now. Mortgage backed. Oh. 28 billion of mortgage backed securities.
They're coming back in. But not all of it. Yeah, not all of it was. Oh, wow, they're accepting. Looks like they're accepting a lot more of it now, which is interesting.
That was yesterday, 112.
Yeah, they said they were going to go from 100 billion to 150 billion target for the overnight.
They overshot 175 or 170.
Whew. I mean, it's just it's kind of
interesting.
I mean, actually, this decline even yesterday was somewhat orderly. I mean, it was wild. I mean, we had 400 or 500 point swings during the day, but.
Well, it's one of those, we talked about it last week or something. We're squeezing down to see charts. Looking at this chart on the YM here, these are 100 points now, just so I can see it.
Yeah.
Yeah. It doesn't look like what you're normal, but yeah, these aren't 20-point moves anymore. These are 200-point moves. Right.
Exactly. Yeah. Yeah. Watch your right scale there.
Yeah, exactly. Let's see. All right.
You guys got any questions? Anything going on? You guys, I mean, if you're trading, boy, tough. Very, very tough here. But the volatility we're seeing, I think, indicates to me that we're going lower. This is just a little bit of a relief rally.
And this is a time, too, if you have portfolios and you're looking to protect it. I had just a small little protection that I put on Friday in case we dropped over the weekend, where I bought some puts on the SPY, and they worked out very nicely once the market opened, and I was able to get filled yesterday. But just some short-term insurance, or even, if you're going out there, not a bad idea to be pulling those up too.
Yeah, Channing sent an email in. He said, I hope all is well. I wanted to see if you could go over maybe the call on how to set up your pivots. He tried to set it up like yours, but he's getting too many lines.
Oh, I didn't even see that. Did that email just come in recently?
Yeah, it just came in.
Okay. Yeah, I can cover that quick. And there was another one that came in I want to get to, so make sure I see that. But the way you're setting up these pivots is it's actually very simple. So for those that haven't seen this yet, it's new. These are person's pivots, which is this pink and red. So we're up at resistance, are the red lines here. And the solid line, the red one here, is the Camarilla points. So I'll open up the studies here and show you that. I have a very minorly adjusted version of the Camarilla pivots called the Pivot Boss. But it's the exact same one. I looked at the script. The only thing that's changed in this one, I'll open it up for you here, is the length is just set to a 1. That's the only thing that's different from the default Camarilla pivots, or Camarilla points, I think Toss calls it. I'll show you where they are right here. If I go to CAM for Camarilla, scroll down a little. Camarilla points is the built-in toss study that draws the solid lines. And when you go into that one, go into the gear, and there's going to be all the R and S levels. So there's R5 through S5. So excuse me, resistance, support levels. By default, R1, R2, S1, and S2 are not turned on. And I believe I have them turned off. Let me look. Yeah, see, they're not enabled to show the lines. S3, 4, and 5 are. That's what I have enabled right now, but the defaults are those are off. So if you want to see more lines for more potential spots, you can enable those if you want to. That's where you see the default colors are gray. Then when I get to S2, S3, we'll start to change the color. So green for support. S4 is also green. Then the very extreme, S5, is the blue, or whatever color, light blue, atomic blue. Then the same thing, the opposite for the resistance. Resistance lines are red for R3 and R4. And then R5 is the blue color again. So those are default colors. If you want to turn on R1 through R1, R2, S1, S2, as I said, you can enable those. So that's the Camarilla points. The other pivots are just the person's pivots. No changes whatsoever on that, except for it might be, I forget the default setting.
What happened to your audio?
Can you hear me now?
I can hear you.
Weird, yeah. Zoom just said your microphone was not working for a second. Sorry about that, guys.
That's odd.
Where did you last hear? John, where did I leave off, or where did you lose me? Andre, you're my funny guy. Started the person's pivots. Okay, so you got the Camarillas. You just didn't hear anything about persons. Perfect. Thanks, guys. All right. So we'll jump back and I'll just show them coming all to there. So Camarillas we covered. Persons pivots are all defaults. I don't change anything in these. I don't even believe these say yes by default. So if they do, just change them to no. What that's basically doing is it's looking at predicting the next day. So you would see the day before, the day after. If you say yes to that, you would not see those. What it does is it takes into account the previous day's open, close, highs, and lows. There's actually a formula. I can put it up. I think it might be the link to the formulas are in the Tradingology site. So you can see that where they devise the formulas from. But these are all default settings. I don't change anything in here. So the person's pivots is that pinkish color. And then it draws the dotted lines above and below. And these are not disabled. So S1, S2, all the show plots are there. And they kind of line up the same as the Camarillas, where the reds are above for resistance and the greens are below for support. Both links are in the site to see the formulas under the covers, but that's exactly how I add those to my charts. Make sense? Did I go too quick on anything? And I hate when open interest always shows up. I got to keep clicking X on it. If you're not getting them to draw, and they only work, I only use them on 5 minutes. Like you can't use them on daily charts. They won't draw. So this is strictly for a 5-minute chart. That's the only way I use them. I mean, if I switch to a 15, I don't even know what it does. Let's see. So they'll still be there. Maybe if you want to do a shorter chart, that might work. But for my, scalping on futures, I like to be quicker. So I use them on 5-minute charts. If you put them on a daily, it'll draw just weird. So that might be why we're seeing an issue on that. I'm just completely guessing there. And let me remember what that email was. Dun, 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 dun. Isaac had a question around the cryptos and stuff, but I don't know specifically what it was. I think he just wants to get in Dave's mind for 5 minutes, which we all understand that.
Who had a question about crypto?
Isaac was asking about crypto. He was saying, let me see it here. Been taking in all the information possible, videos, interviews. I wish I could ask a specific question to you, but it's impossible with all the information. I'm not sure why he can't ask the question what's impossible. So I'll just go on and look here where it says, you are always talking in a very macroeconomic way. Mm-hmm. He's a member of both Tradingology and Strong Market. Yeah, Isaac, we know you well, I believe. I hope he's watching the video so he can see this because I don't see him in the room right now. And
oh, yeah, I think I saw that. He wanted a short phone call or something like that.
Yeah, I was trying to think if there's...
He said, hope we can talk about all this in the next trading room on Tuesday. Okay, so he hasn't been around. He has been traveling quite a bit. So, yeah, that's a good question. I mean, let's see. I got it in front of me. An amazing outlook. Does he ask a question in there, though?
Not really. That's why I couldn't understand this. I emailed him back asking him, like, what question are you looking for? And we can absolutely cover it because I didn't really get a question outside of it other than, can I talk to you for 5 minutes?
Yeah.
20 minutes.
I think he says, I think basically his statement is that, you know, all the information that's out there is kind of overwhelming for him. And so he's trying to figure out how to really narrow it down to what maybe he should be paying attention to, is kind of the feeling I'm getting.
Yeah, and my reply to him was the basics of XRP right now is buy it and hold it. Don't trade it, just hold it because we don't know when. It's just a matter of when and not if, where it will become a fantastic investment.
Yeah. So on a macro level and a very simplified, let's talk about a very simplified level, is that XRP has a tremendous amount of liquidity. It's the third largest cryptocurrency in the world right now by market cap. It has the potential to be much larger. There's a fixed supply of XRP. With all of the events taking place around the world, whether it's interest rates declining or stock markets declining or whatever it is, we're going to be in a deflationary environment. If that's the case, we have an asset with a fixed supply that is highly liquid. And to me, that's very bullish. When everything else is being deflated, when everything else is being printed, currencies and everything else, and all the trade wars and, you know, all of the deflation of currencies around the world, a fixed asset like XRP will maintain or hold its value as long as that liquidity, and it has tremendous liquidity. So you got a fixed supply asset versus the chaos that's all happening around you. And so, you know, my thesis is that it's going to hold its value, and it may be the only asset, and not just XRP, it could be other cryptocurrencies as well, digital assets like Ethereum. I'm not as certain about Bitcoin, and I'll explain a little bit. But definitely Ethereum, XRP, maybe some others. You'd have to do your own due diligence on those. But they have a utility in a world that is becoming more and more closed now because of the situation that's going on. And the fact that if we do go into an extended bear market in stocks, money flows to those assets that can generate the best returns. Every other commodity outside of digital assets, wheat, gold, you know, silver, copper, oil, and look at what we saw with oil. It's highly manipulated. I mean, you can't, as soon as the deal broke down with Russia, and as soon as the Saudis came out and said, yeah, we're cutting the prices, they basically control the market. And, you're kind of stuck. I mean, you're really in fact, the idea of oil, the Saudis coming out and saying that they were going to cut oil prices is very similar to what a country would do when they say they're cutting devaluing their currency. They want more people to use it. They want more sales in bulk of oil, because at a higher price, they can't sell as much.
Mm-hmm.
And so that's very deflationary. In a deflationary environment, a fixed asset with utility is going to be king, I think. And that includes XRP.
Yeah, I have to say, I was driving yesterday and I saw the price of gas actually went down here. And I thought that immediately. I'm like, there we go, deflationary recession, because things are going down and the market's going down, and the oil just went down and the price of gas went down all in the same day.
That's absolutely right. Interest rates down, oil down, stocks down. That is a deflationary. That's the 1929, 1932 playbook that I've been mentioning on Twitter. We had extreme deflation in the 1920s. We have not had that kind of extreme deflation in a really long time.
Stephen just called it out. We broke the true trend day. We're below the 2000. We got a red bar on the, yep, absolutely, Stephen. And so let's see what happens now, because look at the sell-off, or mini sell-off there. I can't even call them anymore.
We broke the low of the day on the YM anyway.
300 points, and I can't call it a sell-off yet.
Yeah.
Because we move in the thousands now.
Yeah, that's right.
The other part, since I will mention this too that I didn't show, is I have the pivots on the futures. I also have a chart with them on the indexes as well, for the Diamonds, Qs, SPY, and IWM. And they both hold true. So they're the most powerful if you're hitting one of those at the same time on futures and the indexes. So keep an eye on that.
That's a good point. Yeah, that's a good one. I like that one.
Look at how the IWM, it held it. It's coming back down to it right now. This one's at a level. They're all at levels. Sometimes you find out who's the leader.
Right.
So keep an eye across the board on the ETFs as well.
Yeah, that's a great point. So anyway, Isaac, I hope that helps you. Try to block out all the noise. My worldview at this point is we are in a deflationary recession. We may go into a deflationary depression. If that were to occur, then a fixed supply asset that has utility and liquidity, like XRP, should hold its value and gain value. That's it. That's all I'm thinking about right at this point. Now, I could be totally wrong, but if I'm wrong, interest rates will be the key. If we see, we have to see on a number of fronts that inflation is starting to come back, and that's the whole key. If we see inflation in the US dollar, we see the dollar come back, we see interest rates come back, we start to see oil prices go back up, that changes the scenario, and we have to reassess. I mean, we have to look at those things like on a weekly basis now, because things do change pretty fast. And we were talking just in January, right?
Yep.
It looks good.
Right.
Everything's going up. We knew there were problems on the horizon, but we never thought it was going to be, kind of changing the landscape that quickly.
Greg asked, these pivots work good for the 5 minute for scalps when the indexes match the futures question. So yeah, it's think about it like, I'll kind of do them so you can see both. Let me squeeze a little. I use the pivots more for seeing if there's anything in the way of the trade, basically. So if I'm in a trade, long or short, and I'm only trading one instrument, this has nothing to do with the VA spread. So I'm not watching this for VA. But so if I'm in a we'll say a short because I broke a level, I'm watching, we'll use the NQ for instance. If I'm in a short on the Qs, or the NQ, excuse me, and I see the Qs are about to hit this level, I'm going to exit my futures trade because I see a potential to turn around, which is exactly what it did here. The futures turned without hitting a level. Why did it turn? Because the Qs hit this level and there was buying that happened that pushed the price back up. So that's how you do the correlation between the two. So it's not like you have to have both levels line up. They're more powerful if they do, but I'll watch either or for exit signals, whether I'm in a long or a short. So if it's moving up and I'm in a long here because I had a level that said I wanted to buy it, and I'm coming into this line here, but the Qs aren't, I'm going to exit my long because I see this pressure coming. Does that make sense, Greg? Good. You got all the scripts? Excellent. And these are free. If you want to see the most powerful, you put that on top with the Renko cloud and you see I'm under the cloud. If I'm at a defined level I want to buy and it goes above it and I see now I'm overbought and I'm hitting the level, absolutely get out. So you put all the pieces together, never relying on only one indicator, and your success rate will skyrocket. I'm glad that helps. Excellent. And with this
Yeah,
one,
did you notice before you switched that the SPY, bring the SPY back up again? Kind of interesting. See those two spikes down before in pre-session?
yeah, so if people are curious, that's not actual trading. That's trading being put on the books that happened yesterday.
Yeah, it's late stuff. It happened a lot in 2008, 2009, where these trades were not just they weren't executed. Well, they were executed, but they weren't printed.
Right.
And so after the market closed, you see these spikes up and down. So it's just a late print. That's all.
Yeah, those are late prints from yesterday. If I squeeze this back, as my computer's very busy right now. We see those were back here when they were actually executed potentially or during the day yesterday, since the would have traded overnight. Get some more squeeze in here.
Yeah, there was just so much volume yesterday that a lot. See, look, there's one overnight there too. There's one in the previous, the red bar.
Yep, there's a sell order that came through late.
Yeah, they're just late prints. Those weren't actually executed at that moment in time.
Yeah, it did actually trade down here and come back up in a split second.
Right.
Interesting how they don't report it till later though. Whole pile of orders came in and look where it went.
Yeah, they're just all jammed up, I think. Sometimes I use those to indicate like where the price could potentially go.
It's got information overload.
I don't rely on it.
Sounds good, Greg. Absolutely.
Valter wants to know, do you base most of your day trades on M5? I have a 2-minute. I use a 2 and a 5. I've been, especially with the amount of volatility that we have, I really like the 2-minute charts. I don't do tick. Sometimes I do tick, but not very often. I stick with the 2-minute.
I do. I'm down to the 5 personally. That's the ones I'm using now. Is the 5-minute is the main one. We had people ask about the ticks. Whoops. And we built the indicators for them. Strong Market Team did. Dave did. All those guys. But so they are there. The tick charts. Extreme short-term scalping.
Yeah.
That guy back up. Dun, dun, dun. Yeah, there you go, Walter. If you're using it, it's getting overwhelming. Sometimes it's good to look at a bigger time frame, and it'll reset your brain. We're coming down to the 80 level on the internals as well. That's dropping down in line with the break we saw there. So those are all lining up. No, Greg, I did not trade any futures contracts yesterday, not with circuit breakers hitting. The only thing that I did yesterday was I closed my put options on the SPY and captured that profit, and that's the only trade I did yesterday, personally. That's the hard part, is what happens if you get in a trade and the bottom falls out and we go to 13 and you're holding one or the other, and while it's out, they reset it somewhere else, and then you're the other way. There's too much risk personally for me to scalp futures in those conditions.
Yeah.
Everyone has to have their own risk management. Yep, exactly. This is historic times. Most people will not trade things like this. So remember this for sure, because this is rare times.
Yeah, in the Wealth Masterclass update we did last week, I mentioned SRS. I added SRS to my portfolio as a hedge, and it's really the only stock position I have, except for MGI. I'm sticking with MGI. MGI is down to like 189, 185 yesterday. I'm buying more. I think if anything happened, because of the way that they've restructured the company, and now that they can do bank-to-bank transfers, that might be even more valuable in this environment. So, it's a huge gamble, because there's only going to be a few stocks probably that are going to make it. And so it's a gamble, but I think they might be one of them if the scenario I laid out earlier keeps up.
Sure.
So it's my only long position at this point, besides long SRS. And SRS did really well yesterday. It was up $3.
All right, we're coming close to time. If you guys got any final questions, let us know. As the market just starts moving back down. See, they got all this cushion now. Even if they close and it's down a bunch, they're like, oh, we're still up over 1%.
Yeah, right, exactly. Yeah, it looks like YM's coming down to another pivot.
Yep, it's coming down to the mean here.
Yeah.
Let's see how that acts as support. The Russell didn't care about it today. I just watch it just for curiosity. I don't trade the Russell at all.
Ever since London took it over, it's like,
it's the less behaved of the children for the indexes.
Yeah.
The IWM is much more behaved than the futures contracts. Here it's playing pivot pong.
I'll tell you, though, there's going to be an incredible buying opportunity, I think, in the next 1 to 2 years. Just, the number of stocks like MO and all the ones that we talked about, the returns and the yield that they're going to generate is going to be fantastic.
I've had a few friends already hit me up saying, hey, is it time to start buying stuff? Just wait.
Yeah, not quite yet.
We're getting there. Not yet. This isn't over yet.
Yeah, everybody has that mentality that, hey, we're down, so it's a good time to buy. It's been everybody wants to buy the dip, but I wouldn't buy it this time.
Voltaire, you can change the volume colors and your appearance settings, so I'll show you that quick. Come into open up your settings. I'm going style settings since I have those squished down. I can't see the gear. So I'll get to it this way for you. There's more than one way to get to everything in TOS. So the settings is the same thing as the gear icon when you look at the full chart. In appearance is where you set your candles. And this is also where you set your colors for your volume. So if you want them to be red and green like that, you say color as symbol ticks instead of the preset, which is blue. So that's where you make that change. It's right there in appearance.
Yeah, and then what it does is it sets it based on what's above that,
Yeah, whatever candle this is,
whatever
it doesn't
can.
mean this is down volume. It's red
Right,
because it was a down candle.
right.
Green candles, green volume. So it's not like these are sell orders that came in, these are buy orders. That's not how it does it. It's exactly as Dave says. This correlates to the candle.
So yeah, so the settings for your candles is where you can tie it into the volume.
Perfect. You're welcome.
So yeah, even everything's starting to turn negative a little bit here. We got a decline on the ADD volume.
Who tweeted what? What did Trump say now?
He's supposed to have that economic stimulus thing coming out today, but I thought it was going to be later this afternoon. 5 minutes ago, he says, Nancy Pelosi just said, I don't know if we can be ready for this week. What? In other words, it's off to vacation and do nothing for Democrats. I don't know if we can be ready this week. Yeah. Oh, 46 minutes ago, he said the Federal Reserve must be a leader, not a very late follower, which it has been. Of course, he's always bashing on Powell. And then, yeah, boy, he tweets out like crazy. A couple minutes before that, he says, our pathetic, slow-moving Federal Reserve, headed by Jay Powell, who raised rates too fast and lowered them too late, should get our Fed down to the levels of our competitor nations. They now have as much as a 2-point advantage. Even with bigger currency help. Also stimulate. Oh my gosh. It's just, he wants those lower rates, and he's going to get them. Market's reacting in turn. I mean, for a long time, right? Higher rate or lower rates was stimulating the economy. Everybody, the traders loved it. Hey, everybody loved it. Now, when you're doing 150 billion repo every night, I think the bond market is telling them, yeah, this is enough, buddy. I don't think we want to go much lower than this.
The 150 is soon to be 250 permanent daily overmarket activity.
Yeah, it's crazy. He's bashing Powell. Powell is like, he really doesn't have anything to work with.
Right, yeah. At this point, it's too late anyways.
Nah, he's got nothing. So the circuit breakers don't kick in, and we've got a 1,000-point intraday swing, but as long as it's not down or up over 5% or 7%, we're going to be okay.
Yeah. Andre says the spreadsheet bearish herding is very strong. Can you comment a little on the spreadsheet?
Yeah, it's super bearish. We've got nothing but bears on that side of the spreadsheet. We had an orphan on the bullish side last week, but we've got everything bearish on the spreadsheet. You want to watch that bearish herding. It's not going to give up. As long as there's bearish herding, we're going to go down. No doubt about it in the long term. We have, in fact, we had, and I told you in the little comments in the spreadsheet, I put in there that watch AVS levels. As long as they remain high, we are in a decline. That happened throughout 2008 and 2009. I had those little comments in the note section there. Look at that AVS. As long as we stay above it, as long as those are highlighted and they're above 1,500, we are in a declining market. AVS is high as bearish. AVS, we had a bull orphan, and that's it. So for the last couple of years, we've had bear orphans. Now we're having bull orphans.
160.
Yeah, 160. We're at 224 on the flow. But look at the AVS. The AVS is the most important thing to watch, along with the bearish herding at this point. every single major decline in 2018 from that November, December decline, AVS was high. 2015, August, AVS was high. 2008, 2009, AVS is high. When that starts to come down and we start to see under 1500 on the AVS, then we're going to probably, that means reduced volatility, and we'll start to see the market go back up again. Until that happens, though, as long as that AVS stays high and we got bearish herding, we're in a bear market. No doubt about it. No doubt in my mind. Absolutely 100% convinced. And evidence, you go back into the historic spreadsheets, you'll see it too.
Okay, so these are the numbers under the covers that everything's derived from that we watch live. 70 is the only advancing issues yesterday.
Yeah.
That's why we crashed like it did. Or down as it did, I won't say crash. 2,000 points, I can say crash.
Yeah, 2000 is a crash, yeah, somewhat.
Look at these. Look at the 21 and 27 day sums.
Yeah, I've never seen them that negative. Yeah, we're gonna have to. To get out of that hole. Whew.
Wow. I'll have to go back and look and see if we've ever broke 5,000, or curious when that last happened.
Yeah, that's why I put the note in there last night, 21, 27 day summit extreme. So, and the color of the notes, if it's black, is bullish, red is bearish. So just as a FYI.
The fonts. So, yeah, so Andre says, how do you read the sums?
Do you still have your, have you updated your chart there? On the second tab on the spreadsheet, there's a tab there, and I haven't updated it, but those indicate there's extreme bearishness when it's under. Typically, in the past, bulls have come in right around 2,000, minus 2,000. But you have extreme bearish herding and you have extreme average volume per share. And so the 21, 27 day sum doesn't matter anymore because we're in a bear market. Yeah, we're in a bear market.
So the way they're derived from, if that makes sense, is it's if I add this up and I go to, I have to hit an equal. Hold on.
Yeah, 21 days. So you got 20. You're adding up all the price changes for 21 days, and you're adding up all the price changes for 27 days, looking at the difference. And sometimes the 21 will catch up with the 27. Sometimes the 27 will catch up with the 21. But basically, it's a rolling sum of the changes in prices of the Dow over that time period. So yeah, all those. Huge.
It's moving too fast on me.
Yeah.
Oh, it went way up. Well, let me smooth this back down.
Yeah, it went way up. Holy cow.
As I say, my computer's really busy right now. So yeah, you would just take 21, just as Dave just said there. You highlight 21 points there, and this is the number. So it's doing it for you.
Yeah, so the sums are basically just what the market's done over the last 21 and 27 days, a total of all of the price changes. But the most important thing to watch is bearish herding column and the AVS at this point. Even the pipeline and flow aren't going to help you. Nothing else is going to help you. We are already over 100% on MT volatility, so there's more sellers than buyers. As soon as we went over 100%, that indicated more sellers than buyers. That's all it does. It tells you there's more sellers than buyers. All right, guys, we're at the end of the hour. Everybody stay safe out there. We're only up 239 on the YM right now.
Look at that. In a few minutes, we weren't even watching.
Yeah.
Interesting Camarilla line. Huh.
Yeah. And we were up 1,100 is the highest I saw this morning on the YM. So that's an 800-point swing.
And the day's still just begun.
Yes. Still
all right. Appreciate you guys coming out. If that's the original JD, it's good to see you, man. As
yeah,
everybody else as
good
well.
to see you. Yeah, absolutely. Stay safe, guys. I think we're going to be in a bear market for a couple of years. Just my opinion.
Manage your risk, manage your money. Don't do anything crazy. Any questions in the meantime, you know where to hit us up.
You're welcome, Voltaire.
Absolutely. Thanks, guys, for coming out. We appreciate you guys, too. You're welcome, Andre.
Andre is a regular. So is Voltaire. Appreciate you guys. Greg, yep, you're a regular, too. We have lots of regulars here.
It's our core guys.
Yes. All right, guys, have a great day. And JD, oh, not the original local one.
Oh, that one. Okay. Yeah, it's my neighbor almost. Good for
Oh,
you,
okay.
too.
Nice. So you have an official neighbor,
I should.
just like the digital asset investor.
Right? The official neighbor of the Tradingology private client group.
Yes. All right, Dan. Have a good one, guys. We'll talk to you guys on Thursday. Thursday still good?
Yep, we're good for Thursday.
Awesome.
See you guys. Have a good week.
See you then. Bye.